Hello, everyone. Welcome back. This is another in the 10-minute tip series of recorded programs for credit and collection pros. This one is titled Common Debt Collection Mistakes to Avoid. My name is Michael Dennis. Let's go ahead and jump in. Common collection mistakes. In my experience, as a credit manager for 25 years and now for the last 5 years as a credit consultant, these I believe are the most common types of mistakes that credit pros tend to make. The first one, believing that diligent collection efforts will be successful. What I'm referring to here is the idea that diligent collection efforts will somehow make up for any shortfalls in terms of poor execution of the credit decision-making process. In other words, if we make a bad credit decision to extend credit to a marginal customer, that problem, that initial mistake, is not necessarily going to be overcome simply by being diligent about trying to collect an unpaid and now past due balance from that high risk customer. Accepting a payment commitment for anything other than immediate payment in full from a past due account without making certain that the offer that they have made is in fact likely to be the best offer that the customer can and will make. Deciding not to deal with decision makers. What I'm referring to here is the idea that some collectors have that they will not escalate a problem within the customer organization when their normal contact in accounts payable cannot or will not make a reasonable and realistic commitment for payment. Not knowing if your customer contact can make and keep whatever commitment they make to you. I resolve this by asking the question specifically. I would say to someone in accounts payable, do you have the unilateral authority to keep whatever payment commitment we discuss and agree upon today? Now, sometimes I get a clear and unequivocal yes, that's going to happen. And sometimes what I hear is something like this: well, my decisions are subject to review by our CFO. What that means is these are not commitments we're going to be discussing. These are something less than a commitment, a proposal, a tentative offer on the part of the customer, as opposed to a hard and fast commitment for payment based on whatever is negotiated. More common collection mistakes, note taking rather than negotiating with delinquent customers. Accepting the customer's first offer. This requires a bit of elaboration. Many years ago, I was the backup, the support for our accounts payable manager who was leaving on an extended medical leave. One of the things that I learned as we'll call it the interim accounts payable manager, was the way in which our accounts payable representatives dealt with creditors calling to inquire about payment. Basically, what they did was when they got a phone call, they would respond with what I would have considered to be an outrageously slow payment proposal. They would say something like this: I'm just looking at our records and it indicates that the payment is going to be scheduled for 2 weeks from next Wednesday. And they would stop talking at that point. What they were hoping was that the customer would say something like, okay, or thank you, or let me make a note of that, or anything other than, I'm sorry, but that response, that payment proposal is deeply problematic and we'll need to talk further about this particular problem. What my employer learned was that about 60% of creditors calling would accept their first offer. And what happened if they did not accept that 2 weeks from next Wednesday first offer? If they said something like, I can't accept that, or you're going to be on hold if it takes that long, or something to that effect, well, then they would negotiate in good faith about a more reasonable and realistic commitment than 2 weeks from next Wednesday. The third bullet relates to allowing yourself as a collector to be intimidated by your customer. It's important to recognize that some customers use intimidation as a negotiating tactic. They will be confrontational and rude and abrupt, and all of those efforts are intended to intimidate the collector into asking for less than immediate payment in full and accepting a proposal that otherwise would have been rejected. Failing to treat customers as equals is a reference to the idea that some collectors become intimidated when they have to speak to a senior executive in the customer organization to request or negotiate for payment. They're very comfortable potentially talking to their accounts payable representative and maybe with the accounting manager. But when they start talking to controllers and CFOs and VPs of finance or business owners, they become intimidated. And my recommendation is treat everyone as your equal. Treat them professionally and treat them with respect, certainly, but it would be a negotiating problem to fail to treat your customers as your equals because that puts you in an unfavorable negotiating position when you're talking about the status of your past due balance. Permitting or allowing grace periods before calling a customer to discuss the status of a past due balance. As a consultant, I've seen grace periods before the first contact with the customer of up to, believe it or not, 30 days beyond the due date of the invoice. In other words, in that organization, the grace period was 30 days, so no contact was made by the credit department, by the collectors, to delinquent customers until and unless the account became more than 30 days past due. Put it at its most basic, grace periods benefit the customer. They have no recognizable benefit to the creditor company. If you have a grace period and you don't want to eliminate it, consider at least, cutting it in half, drop it by 40%, decrease it by 60%, and see if there's a significant pushback as a result. But again, fundamentally, grace periods benefit customers, not creditors. Failing to prioritize your outbound collection calls is a problem. We need to ensure that there is some methodology that's employed by every collector in determining which customers get called in which order. It should never be the case that fundamentally people start at, the letter A and they work their way through the alphabet. That is inadequate in the context of prioritizing your outbound collection efforts. So in connection with non-enforcing unearned discounts, perhaps an illustration would be helpful. Let's assume that your payment terms are 1% 15 days, net 30, meaning that payments that are received within 15 days of the invoice date earn a 1% early payment or cash discount, and invoices otherwise are due in net 30-day terms. The common problem that I see, a recurring problem that I see, is that there is an automatic grace period somehow built into that 15 days. It doesn't really mean that the payment must be received within 15 days. It might be 20 days or 22 days. And the problem with that is, in a very real sense, it starts to defeat the purpose of offering a prompt payment discount if, in fact, the customer is allowed to take the discount, notwithstanding the fact that they didn't pay within the discount period. Common collection mistakes continued. Failing to reconfirm customer payment commitments in writing as soon as they've been received is a mistake. The benefit of confirming customer commitments via email as soon as you get them is it makes it less likely that the customer will break the payment commitment. In addition, if they do, for whatever reason, break the payment commitment, what they can't then say very easily is, I don't remember saying that. That's not what I said. You must have misheard me. You must have misunderstood me. Why? Because you confirmed it in writing. Another common mistake is not using what I refer to as the 2 and up rule in debt collection. What's the 2 and up rule, Michael? Well, the 2 and up rule says, I'm not going to spend endless days leaving message after message trying to reach out to the exact same person to discuss the status of the exact same past due balance. And instead, I'm going to use the 2 and up rule. I'm willing to leave voicemail messages if I must, but I'm not going to leave an endless number. I will leave 2. And if they don't respond in a timely manner to one of those 2 messages, then I'm going to go up. I'm going to leave my contact in accounts payable and I'm going to go reach out to the controller. And if I leave 2 voicemail messages for the controller and she or he doesn't call me back, I know what the next step is. I'm going to go up until I find someone that's willing to address the past due balance with me. It's a common mistake not to inform customers promptly when an order goes on credit hold for a credit-related reason. The leverage in connection with credit holds is drawing the customer's attention to the status of their account and the problem, and providing the encouragement they need to issue payments sooner rather than later. Well, those benefits tend to go away if they don't know that their account is on credit hold or they don't know quickly enough. Another common mistake is substituting written collection efforts for collection calls. I'm an advocate, by the way, of both. Let's do both. Let's contact the customer in writing, either in an automated way or otherwise. And in addition, let's not give up on the idea that we can use the phone as an effective collection tool. Another mistake is ignoring broken customer payment commitments. What often happens as I listen in on conversations is that the customer doesn't want to talk about why the commitment was broken. What the customer wants to do is talk about address their next payment commitment. And what I encourage you to do is not ignore the broken payment commitment. What I encourage you to do instead is ask the question, what happened? Why wasn't the commitment that was made to us in connection with that past balance? Why was that commitment broken? I know it's a difficult conversation to have, but if you have that conversation, it will make it less likely that the customer will break payment commitments to you in the future. And another common mistake is not having enough different ways for customers to pay past due balances. An example would be you can pay us by check, or you can pay us by credit card, or you can wire transfer the money, or we accept PayPal, or whatever other way other than they put a check in the mail and it gets deposited into your bank account. The other ways make it more likely that you will receive payment more quickly. Thank you very much for your time and attention. I apologize. I know this one went more than 10 minutes, and I will try and do better in the future. If you found this program to be interesting and helpful, great. If you'd like to hear the entire presentation on accelerating collection of past due invoices, please consider ordering the on-demand program. That's available from my sponsor, Wisconsin Credit Association. Again, thanks. Have a great day. Bye, everybody.